Good afternoon, all. Camelback Trading 2724 coming to you this Friday afternoon, June 12th, and we're looking at the last 2 days of the SPY ETF's market profile here on Window Trader. And I guess the big question today is who won? As after a tremendous down day yesterday, we got consolidation, which was firmly expected. But here's the thing, two things that surprised me today. I did not expect, consolidation is one thing, I did not expect us to go and take out 3 sets out of the 4 sets of single prints that early. And then on the flip side, since we did do that, I certainly did not expect to see us flush out in B, C, and D, and almost take out yesterday's low. A couple of weird things. Algos, we had a huge range yesterday, so I'm not surprised we bounced around in there. But again, not the easiest day to trade. I had a good day. I was struggled early on one trade we'll talk about, but I ended up having a very good day. Obviously, we have the huge gap above us. All 3 time frames are in different stages. The bears had a chance to get an outside week down. They did not get it. We bounced off the 200-day moving average a bunch of times today, between yesterday and today, and we've closed above it for now by like $3. So again, the big question is volume's good. 177 million with the after hours. So we're going to do 185 million. We did 209 million yesterday. So 400 million shares the last 2 days. It's pretty good volume. But here's the question. Is it just those week longs getting out from the past 8, 9 trading days? Or is it something more? How bizarre, we had 4 sets of single prints yesterday. We take 3 of them back today and then have a trend day down today. Inside of balance for the most part. Yes, we did take out yesterday's low, but that didn't happen till later in the day. So now over the 2 days, we have 3 sets of single prints. Although we did finally find 2-sided trade today as we go 8 wide. 7 wide. I'm not counting end period. So a lot of bizarre things. It'll be interesting going forward next week. The good thing is volatility is back. First trade of the day I did today was an A period. I said if we get up to around E's high, anywhere near where the last set of single prints would start. And again, I'm in 13 tick increments here, so it doesn't look as big. If you put these in ones, you'll see how stretched out they are. I will take a short. And I did that. Yes, it was above the opening, but I thought the odds of taking back the entire trend day in one shot that quick would not work. And it didn't. Came back down through the opening. I actually covered it around the opening because I didn't expect it to get as far above the opening as it did when I took that put play. But it was a nice play. I actually got long in B period before we went time frame down below the opening and took it off when we got back right underneath the opening. So those are 2 good trades. Then I put myself in trouble. I lost on the trade, but I could have lost a lot more. As when C flushed out, now here we go. It's kind of a replay from yesterday. I'm like, but here's where the difference was from yesterday. Right? Yesterday I said I was disgusted with myself because value was lower, trend day down, gap lower. I should be looking for shorts. Now today, things were a lot different. Yes, we're one time framing down. Yes, we have a trend day. However, 2 major factors were different. We had unchanged value, and the indices were very, very strong. So I didn't mind. So in C period, when we took out B, instead of getting up on a short play, I didn't think these singles would hold, and I started buying it. And I got pretty large at one point, and I was down pretty good at one point before it finally rallied, and it gave me a chance to get out before it really flushed. So I did lose money on that trade, but I certainly got out before I got hurt. In fact, I think I got out when it got back into B's range, so because I'd bought a bunch down here. So I lost money on it, but I was out a lot more. Then in E, I made it all back and a lot more. So we flushed down in C and D again. I don't want to say I was biased to the long side, but I was just having trouble thinking that we were going to continue. I was shocked that we had a trend day down. I really was. And I'm still surprised that we held it. But in D, when D tapered finished, E started, couldn't take out D's low. I started getting long. We had taper on E's low. My out would have been below D's low. I started to add to it. I added very good size, and then we finally popped these high, stopped the one-time framing down. We still had single prints. I firmly thought we had 2 sets of single prints. I thought this would fill, but took it all off right around E's high. It was an excellent trade. I was very happy with it. I period even went high, but never could fill the single prints. We still have some. We have 2 sets, C and B. Excuse me. Now F went back up. Now I didn't know what to expect. I was pretty neutral because we had unchanged value. We had indices that were going all over the place, but for the most part, up on the day. For the most part. Yes, they went red a couple of times in the ES and in the NASDAQ. But we started finding two-sided trade. I ended up taking only 2 more trades when we finally started coming back down again and we flushed out an eye. Now the trade, and I said this in the room and a lot of people got on board and kudos to them. I was talking, but I was also kind of busy doing something. I said, if we take out H's low, we're going to take out today's low and a good chance yesterday's low. And that's exactly what we did. I did not get on board till later, but it still turned out to be a very nice trade. And then in L, I took 1 more. I thought maybe they would try to hold us below last week's low. I took a short right around there. Went about 60 cents against me. I said, you know what, the heck with it. I took it off. I lost on that one, and then it came in about $2, $3. But that's okay. So I still had a good day. It's a very erratic day. The algos are all, to talk about emotional, mindless, whatever you want to call it. These are all things we're going to discuss. Again, you still have time to sign up for my webinar. Right? It's going to be on gotomeeting.com. So my information is out there on Twitter and on YouTube. If you want to still sign up, be a pretty good educational session, especially with these last couple of trading days. All right, destinations for tomorrow. First one, and again, our destinations are kind of far and wide apart, so you're going to get a lot more whipsawing in price going forward. So 305.90, that's the first set of single prints. F's high, they get filled at 306.06. They're only 16 cents. When they started in F, they were over 200 points. They were over 200 points. I'm sorry, I apologize. When they started in E, right? D period finished, they were over 200 points. They chip away, and they can't get the last 16. Absolutely astounding. Above that, we have the second set, 306.52. C's high, they fill them at A's low, 307.06. Today's high of 309.08. Yesterday's singles, 309.57. D's high to A's low, they get filled at 310.01. And then yesterday's high of 312.15. And don't forget, a 607-point gap. That gets filled at 318.22. For the downside, now we closed at 304.21. My first downside destination is today's low, 298.60. So just under $6 is my first destination to the downside. So price is going to be whipping all over as these algos search for a level. Now, below that, we don't have anything for another $2. 296.87, which is a weekly low, and then filling a gap at 295.63, a 124-point gap from May 26th. Then we have 295.45 price probe from the 22nd of May, 294.25 afternoon pullback low from the same date, and 293.22 daily low. And I'm going to stop there. We have that other weekly low and a huge gap below that, which we could discuss going forward if we trade lower. Again, some people say, well, is this a B shape? I'm like, well, look, we have 2 sets of single prints. I can't call it that. It's a trend day down. Yes, we found two-sided trade. I mean, I really thought when we made a new low today and the indices turned red, I'm like, wow, there's nothing really to stop us to get to that other weekly low and that other small gap. But they didn't get, we took it out by $2, $3, but we didn't get much more below that. Okay, let's go to the charts. Monthly. One time framing up, 2 months. Looks like a pretty ugly candle right now, but again, it's only June 12th. The big thing is, going forward, bulls would like to come and get above and close above 313.84, right? Be a lot more impressive, but we are one time framing up. Weekly, So now I said they're all in different time frames. Monthly is one time framing up, it's up. Weekly is in balance. We took out last week's high, we took out last week's low, but we closed inside last week's range. So it's a 2-week balance, right? The one time framing up is done. Possible we have an inside week next week. Who knows? We'll see. But right now, we're in balance. They also closed above that 302.60 level and this balance. So that's important. And then the daily is the worst of the three. We're down, right? One time framing down 2 days. The gap is my main focus. Remember, we had an outside day down Wednesday. It was a little nuance that happened late in the day. At one point, it looked like we might have an outside day up, and then they flushed it and we closed with an outside day down. Certainly didn't expect this kind of move off of it, but it shows you how powerful these things are. That's why the outside week down would have been pretty important for bears to hold. It also goes to tell you who's really in control. You know, bulls are going to say, hey, bears couldn't do anything else today. We're getting our strength back. We consolidated. It's healthy, and we're going to go forward. And the bears are going to say, well, the bulls didn't get anything back today, really, considering the move we had yesterday. So it's still open for debate. We did bounce off the 200-day moving average yesterday and a bunch of times today. However, I've used this analogy a lot. It's like that chicken that's pecking you to death. If I was the bulls, I wouldn't want the bears to keep pecking away down here because at some point you're going to go straight through it. So that's something that you don't want to have to keep defending. We had a really good day and week in the Camelback trading room, voice channel room. Come check us out at camelbacktrading.org. Please check us out and maybe sign up for the webinar tomorrow. Have a great night, a great weekend, and we'll speak prior to the opening on Monday.